Option Center. It's a weekend edition. Thank you everybody for watching. If you are new here, go down to that bottom right hand corner, hit that Option Center logo and subscribe. We will be going through a lot of information on the SPX. We're going to check out QQQ and IWM just for a little bit of maintenance, and then we'll end it off there for non-patrons. And the patron will do a little education on hedging, and we'll check out Roku, Beyond, and Piton, and why those are used as hedges. Why I use those as hedges this week and probably next week as well. So let's jump into it. We have SPX on the monthly. We are riding in this channel. We have wave 1, primary wave 1, 2, 3, 4, and we are working primary wave 5. Is this the exact top? Not really sure, but we definitely have a reversal candle off of the channel top there, retested and came back down. We're still in the inside month. At this point, we tried to break below, but came right back in there. But everything is bullish. We're above all MAs. The MACD is still riding high, and we are in the overbought territory still with divergence in the RSI. So nothing to see here except we have that reversal candle, and we have to get follow through at this point. If we start, we really want to get bullish if we start to break above this reversal candle on this channel top, then we would have something to put our back on. But until then, we can't be really bullish at this point. It becomes somewhat neutral to down that we're looking for, at least some sort of correction. Let's go down to the weekly just to see if we can learn something else from this. All right, on an intermediate wave 1, 2, 3, is 3 over? That's the big question. We think it is, and we're actually doing an A, expanded B, C down to this rising pivot. On this chart, it looks pretty clear and clean to me if we start breaking some of these supports. Now, we are holding all of the MAs. We're testing the 8 EMA at this point. We have an inside weak candle. But we have to consider this a bullish chart until proven otherwise, so we can't get mega bearish yet. And we do have bearish divergence, negative divergence, you can call it either one, on the MACD, but we're still well into bullish territory, which means the trend is still up. And then on the RSI, we're losing a little bit of strength there. We're coming down to the 58 area. It looks like we get most of our support between the 55 to 50 area. So we're coming into that, and we'll see what happens around there if we start to break down. But we've been over this this 50 line since the Corona crash started to recover. We got over it, and that was that since April or so 2020. All right, so let's go down to the daily. See what we can see here. Trend is our friend. Now I have this megaphone pattern drawn out. That's kind of what our guideline to what I'm looking at. I'm not necessarily playing that at all times, because on lower time frames we're playing bounces. We're short-term traders here to intermediate, but we have a lot of IRA long-term plays as well. But it looks like wave 3 ended here. We have a large wave A, expanded B, and looking for an expanded C to the downside. That would be our more bearish scenario. Our less bearish scenario would be that wave 3 ended here. We have a smaller A, B, and looking for 5-wave move down to at least this rising pivot here for C. So a little less bearish, but either way, we're looking for a 5-wave move down at this point, whether this is a bearish 1, 2, and then big 3, 4, 5, or this is A, B, and then we have a 5-wave move down to end C. Okay. That would be our flat pattern. C doesn't have to go that far. It could just be this center line here for our channel. Lots of places. So we just go day by day with the support here, but we're holding trend. We're holding the 50-day moving average right now. We did break down from the 8 EMA and the 20. Couldn't hold above that. But for you bulls, you do have a setup here, and that's where this would be a 1, 2. and we start working wave 3 up from there. So let's go down to 65, see if we can see it just a little bit closer of what's going on there. And, for this week, what we'll really be looking at. And if this is a 1, impulsive wave move 1 up, this would probably be an A, expanded B, and a C, a 5-way move down C to end that expanded flat. And this is a possible 1, 2, or this could come down a little bit more. And we'll see where this Fibonacci retracement up to the top. Perhaps we come down to that 45.85 area, which coincides with the bottom of the gap, which respectfully would be used as support anyway. So we might come down to that area or way down to the support area at 45.45 area, which would also be the 786. So bulls have a chance either way to set up as long as we're holding those support areas. Now we start getting underneath this this purple line here, and that should be game over for the bull scenario. It's not technically invalid until we get underneath this low here. Also the gap at just about 4,500 area. We have to get under this for it to completely be invalid. But you see where I'm going. The bulls have a chance until then, and then it's completely into that bearish zone that we were talking about before. So we're going to be cautious with our and keep hedging at each support area just to be sure that we're on the right side of the trade. And if we start to really impulse to the upside at that point, then we know that this is a 1-2 setup and we're headed to the upside. If next week we are completely bearish and we are just slicing through levels, then we know that this is the impulsive wave 5 down or the possible larger wave 3 down, which would go much, much further and faster than the first bear scenario. So, okay, those are the things we're looking at there. Let's go over to the VIX futures. Check the things out here. Check what we got going on. You can go up to the daily time frame. All right, we had this downtrend that held the first pop here that we had in some time. So we'll be looking at that, watching what happens there. But here's a low. We had a high, a higher low, and a higher high before we started coming down. And it appears like we're trying to make another higher low, which would be creating a significant market structure for the bulls. And we'd see some highs, some new highs after that. So if we start breaking this downtrend line, we probably will start seeing some bigger moves up here to the 36 resistance at that point. We'll have to see what happens after that. But then that means that the market is headed down. And probably headed down pretty quick. You see the MACD is at the 0 line, so it kind of held that support area, and that's where we started bouncing here. But we're underneath the 8 EMA. This should be pretty clear. If we start getting over the 8 and the 20 at that point, we'll see what's happening. The market should be heading down. And then underneath, we start closing underneath this 50 and 100-day moving average. And really, we should fill the gap, and the market should be making new highs at that point. Okay, so let's go over to SPY. Check out the volume we had. It was quadruple witching. So we had huge volume into a bearish doji down. So it really confirms we would have had volume either way, but it looks very bearish after this gap down, and we pushed right into the 50 MA, and we're holding that for now. Close the gap, and we'll see what happens next. Okay, let's go over to QQQ. All right, QQQ kind of has the same thing going for it, the megaphone pattern that I have here breaking down from the channel. We're just making lower highs, lower low. Will we get a lower low from this point? Possibly. I think so. But the QQQs looks much more bearish than the SPY. If you notice, we're underneath that 50-day moving average. We broke the trend line. underneath the 8, underneath the 20, and we're just holding on by a thread from these previous all-time highs. So for the bears, start breaking underneath this all-time highs. You put your back against there, and you can start trading to the downside once again, pretty aggressive. Now for the bulls, we start holding this area here, and we really have some work to do to create some bull market structure. This doesn't really look like a 1-2 pattern to myself, but you never know. So we hold here, and you have something to work with. But I'd look for a higher low, higher highs at that point for the bullish scenario. And I did put the title as 1 leads and 1 executes. And you'll notice here that IWM has already made its move to the downside. Huge move up, and then a fake break back down to channel support, the purple channel. The blue channel is what held it in. We broke down from that point, and we're holding the purple channel for now. What I mean by 1 leads, this led us to the downside. A lot of people use the IWM as a leading indicator, and you saw that it made its move first, which is leading the market, but not pulling the market down. It's not strong enough with tech being so strong at that point. Now that tech is correcting, it is following the IWM, and it is pulling the market. And it seems like IWM is the stronger one relatively, but that's just these last few days when it's holding these support areas while the QQQ is pulling everything down with it. So, the IWM leads, QQQ actually executes the market correcting. See how that works? All right. So with the QQQ, we had a WXY. That's what I'm looking at. A more bearish scenario would mean that we had our end of our primary wave 3, and we had an ending diagonal up here to end off with wave 5, and we have a much larger correction to the downside coming our way. I do, in the secondary bearish scenario, think that we're coming down this 382 around the 200 price area. But the bullish scenario, you got to hold on to this support. We're underneath all the MAs. You got to hold this support and start working your way back up to the upside. And perhaps, since all these stocks have been beat up so much, that's the case, that's what's working now. But not so sure about that. Some of these stocks have moved so far that the corrections are just not done yet. Okay. That will end off with the SPX. Let's check out SPX for the expected move for the week. Kind of just gives us a playing field for the week. We had this massive move down. The volatility was spiking so hard, so you had huge expected moves, and we touched both sides, to the downside, to the upside. This one did not. This actually didn't touch either one, but with this massive, I think it was 154 points to the upside, used every single point of that, plus a little bit more. And now the volatility has subsided just a little bit. Next week we have four-day week with Christmas, and it's still the same size as the last week of about 80. It's actually a little bit bigger. Last week was 84. This week is 87 points to the upside or to the downside. I do think the downside, but definitely what we like to do is play the direction that we think, and we'll put the butterfly hedges on the top side for some hedges there as well. So that's it, you guys. Thanks for joining us here. If you like this, if this video helps you out at all, or if you just like my voice, I don't know, press that like button. Appreciate you. And patrons, stick around. Okay, patrons, let's get a sip of coffee here. I just want to talk, not for very long, maybe 5 minutes or so, on some of these plays. So if we're playing pretty aggressive to the downside, we always have to have these upside hedges. And this one was a perfect example of the SPX. What I do is if I'm expecting to hit this lower edge, we'll play pretty aggressive down there. I'll have a couple style of hedges on. I'm not going to teach you exactly what a butterfly is. You can look that up, but I'll put a butterfly right on this 47. I'll use the SPY as a matter of fact, so I can go over there and I'll show you exactly what I do. Let's go on that hourly time frame. So with the point of control coincides the expected move for this week. I already adjusted it. It looks like we already have a 1-2 setup for bulls. And if that holds, then it'll probably come up here pretty quick. But we'll put our butterfly on this 468 area, and we'll do a 2-point wide butterfly to the upside, 2-point down for the lower side, as one of our hedges for the actual market. And then what I want to get to is Roku. We used Roku last week, and it's looking really good for a nice bounce play this week. We're getting back over the 8 EMA and also the 20, so we have some room. We'll probably see a little bit of resistance unless we gap over on Monday, but because we closed the gap here to the downside, but that usually coincides with a little bit of resistance there. So I'll go ahead and take that gap out, but now we have a little bit of resistance in this area. But it's a minor resistance, so we can go straight through and retest these previous highs from the week before, maybe 2 weeks before, right up here to the gap level and resistance as well. And we also have a downtrend, so I wouldn't really play that. There's also the 50-day moving average. So this would be a great area to take some profit off if you are using this as a hedge, but we have some upside left while we're playing the downside on the market. These names are showing some relative strength because, I mean, quite frankly, they've been abused. We have an A, B, C. I do still think that Roku has some downside left. Didn't quite hit a major area. There is a support area from here that we're holding for now, but much bigger area that I'd go aggressively long would be this trend line and also support area right below here to possibly into C, an A, B, C there. So what we're probably getting at this point, this could be a double zigzag or so a WXY, or this could be the 5-wave move down and we're wave 4, and that would end up for one more wave to this downside for an ABC. So we won't get to I'll do some of these names. I'll actually go through some of these names later in the week. Let's go to Beyond now. And I'll do the full typical synopsis that I usually do in the market analysis from monthly all the way down to the 65. But you see we have this channel here that Beyond has been trading in. We came down to the bottom of the channel, so it's a great objective entry here. We made a low and made a high, and then a higher low at this point, and we're starting to break to the upside. We're over the 8 EMA now. We have the 20 to deal with, but above that, if this is a 1-2, we're looking at about the 618 here. Or if we make another 1-2, then we could be looking for a little bit more aggressive move to the 86 area where the gap coincides. So each one of these, we want to watch those areas, take some. There's also, if you notice, a little bit of resistance here. You want to take profits at each one of these areas and then let some runners go if they can. So that would be our game plan. This is looking pretty constructive to move to the upside. So off of the channel bottom. So we have something to put our back against. And also if we get back underneath this day's candle, then that invalidates this whole thing. All right, and we have not much, but we have lower to go. So Beyond, again, it's a relative strength as the market's going down. Looking to the upside, that would be a great hedge. And Piton, we don't have a whole lot diagrammed on here. What I did, I noticed somebody talking about it on Twitter, so I checked it out, and immediately I saw a support area, a huge support area, and so I had to go along there for at least a bounce. Now it looks like you had a massive correction down to the 89, just above. We're just above the 89 retracement. But with this support being here, it looked like we should take a stab at this. So this would be kind of a knife catching, but it showed relative strength. We had a almost 7% move, and regain the 80 MA. Same thing as the Beyond, testing the 20. But all of this chop, we start breaking down from this and or breaking out of this, and we should have a pretty sharp move from this point on. And then we had some divergence as well. So start breaking above this, and we should see a nice move, maybe up to the gap area. I have a lot of things to do on this chart, but for now, I'll clean up just a little bit. We'll do some more work later this weekend, and we'll do an analysis on it for you. But we should at least test this gap area here at 57.50 and use these names as hedges for our down moves in the market. A lot of these names are relatively stronger because they already had their move down. And the tech names like Apple have just been screaming to the upside, and really just has not even been touched yet. I mean, this is nothing yet. So if this is the end of Apple's move for now, then this thing should pull the market down incredibly. You know, the other names should be pushing to the upside, but maybe are held back with some resistance and just grinding to the upside, while this thing will pull down the entire market down with it. So Apple, Google, and these massive moves. Look at this move straight up. And this is not a correction, you guys. This is nothing. A correction, you know, we should come down to 2,000. We should test all these lower areas here. You know, that's a correction. That's a Corona crash. That's a correction where we went down from 1,700 points to 1,400, 300 points there. You know, this huge move should have a larger correction eventually, and that should be 1,000-point move or so. You know, that's what we're looking for, and that will certainly pull down the market with it. NVIDIA, massive move, and we think we just corrected now. We're holding that support with this rising pivot. We break this support, and we really should be testing right down in this 220, perhaps a little bit lower area. But I'm just showing you, for example, what's going on. And I didn't intend to do these, but Amazon's not really the same thing. It's been moving sideways forever. And so that's actually correcting in time. So we're not worried about that name. Tesla, just massive moves where we haven't really corrected. This is a little bit of a correction. That's a correction. But this, nothing yet. Nothing yet, you guys. We should come down here for this move, maybe visit one of the previous wave 4s, bow and arrow type at 650, or maybe down here to 400. That's the move we're looking for. That will pull down the market with us. So, okay. That's all I got for you. I hope that helps. Just wanted to teach a little bit about hedging. So while we're playing the downside and reaping the benefits of the market moving down, we do throw on some of these trades moving up just to make sure that the bullish scenario doesn't play out on the market as well. So you guys, thanks for joining me here at Options Center. Patrons, have a good day. We'll see you Monday.